Yeah, great. It's a terrific start, and it's interesting to me that you're talking about using private vehicles as as your primary way to address this. I mean, as we've thought about it, there's obviously a span of asset classes, but somehow when you're over on the big, large cap public equity space, while we do something similar as far as screening and trying to pick the better companies on a lot of different scales, including climate, I don't think that's really what the Clean Trillion is about. That's not moving new capital in that direction. But I believe that it can be done with public equities, and I know, Richard, you guys have been thinking a lot about that, right?
Yes, we have been thinking about it, and our driving force has been our constituent base. So at Friends Fiduciary, we manage, as I said, about $315 million under management. Not big dollars, but it's meaningful dollars. We serve approximately 350 Quaker groups throughout the country, and Quakers are not shy about making their opinions known to us. So we receive on a weekly or monthly basis emails and phone calls about what they don't like about what we're doing. And so that has gained a lot of momentum over the past few years, particularly in environmental concerns. And it really gained a lot of traction with the divestment movement that gained a lot of foothold throughout the colleges and universities over the past few years. And so we as an investment committee felt we had to address what our concerns were being voiced to us. So we decided to launch a new fund that is free of fossil fuels. So we did this somewhat out of defense because we thought we were going to lose assets as well, but also because we do believe that environmental concerns are important and should be addressed. There's debate on our committees whether divestment itself will get us to where we need to be at the end of the day. Maybe it's more symbolic, perhaps. And so what we did as we created this divestment vehicle, this ex-fossil fuel, it's called the Quaker Green Fund, by the way, is we noticed that as we removed all fossil fuel energy companies from the fund, we were then forcing over allocations in other parts of the portfolio, which could itself create unintended consequences. So we decided it looked like an important, meaningful idea to add a proactive, clean tech, alternative energy piece, because we believe that this was going to be the wave of the future. This is going to be part of that bridge to get us to where we need to be down the road. So as we were divesting fossil fuel, we added a clean tech component to the portfolio, and it happens to be in public equities. They're of the smaller variety, so maybe they're maybe they have more impact at that level, I would say. But we had to decide what was the appropriate amount, what would that do to the volatility of the fund, what were the return expectations, some of the questions that were asked of the earlier panel that we can speak to soon. So in a nutshell, yes, we're working on it, and this is how we've put it together.
So can I just ask, so do you have staff who are actually picking securities, or did you find a compatible manager to put together a portfolio for you?
We're thin on staff, so we work with outside managers. We're a manager of managers.
That's what we do.
So we looked over the whole horizon of possibilities, looking at ETFs, mutual funds, and granted, we could have gone that way were it not for some of our other Quaker guidelines, which kept us from. We needed more control, basically, over the portfolio. So all of our portfolios are separately managed accounts where we can veto, I guess is a perfect way of saying it, any security that's brought to our attention. So we get to keep it clean and crisp of our Quaker values and implement the strategies. So one of the challenges, though, is finding managers who are willing to work that way. It gets obviously really difficult if you're talking about hedge funds or anything of that nature, where managers tend to want total control of their portfolio, plus they lack a little bit of transparency, which we don't agree with either. And then there's always the issue of cost. So we have a lot of issues on our table, but we've chosen to do it by working with an individual managers whose specialty is in this clean tech, alt energy area.
Yes, and I think, certainly the smaller cap, more pure play kind of companies ties right into the clean trillion, and I think that's great stuff.